Okay, hello everyone. It's been a while. I dropped the video here on YouTube. So I just thought to myself on Friday, it was a busy last week. So I thought to myself that on Friday I was going to share another very insightful video content with you guys. It's literally going to help you the same way the market structure video has been helping a lot of people. But now I'm just going to go slightly more in depth, right? Slightly more in depth. As of course, you know, I take one-on-one private mentorships only, one person a month. So obviously, if you want to get a lot more in depth on that, then you're going to have to enroll for private mentorship, no group mentorship, and no signal group. All right. So I'm going to take us first on the theory aspect of it, which you already have a good understanding of if you watched the market structure video already. But I'm going to drop a link of the market structure video in the description below, right? So you could watch that first before watching this one. But basically, let me give a very rundown about it before I proceed to the video, right? Okay, so we know about market structure already, right? In order for market structure to make a whole lot of sense to you, there's something that you need to have deep understanding of, and that is time frame correlation. Most people don't know about this, but this is very important. And I've been doing this with my guys for years now, right? It's something I haven't shipped anywhere. But basically, time frame correlation makes things a lot easier for you, all right? But in order for me to explain this, I'm just going to be giving one trade breakdown as well, right? But basically, if you are trading off certain timeframes need to align in order for the trade to have a higher probability of being a success. So for example, if you are trading off of a weekly time frame, right? You want you are trading off of a weekly time frame, you want your daily time frame to align. Okay. Obviously, you are going to get a lot more if you do have a class with me, right? If you are trading off of the daily time frame, you want your 4-hour time frame to align with the daily time frame. If you are trading off of the 4-hour time frame, you want your 15 minutes time frame or your 30 minutes time frame to align in the same direction. Okay. Let's say M30 or M15. You want that to align. All right. And if you're trading off of the 15 minutes time frame, you want your 1 minute time frame to align, or your 5 minutes time frame to align in the same direction as the 15 minutes time frame. Okay. So this is basically it. This is what we call time frame correlation. It needs to make sense like this. Otherwise, you're going to find yourself in trouble. Okay, so this is something you should hold on dearly to. You guys have seen me trade off 15 minutes and 1 minute. You guys have seen me confirm entries on 1 minute time frame and take trades off of that, right? If you're in Telegram group, the main channel, you would have seen me share some trades like that as well. All right, so I'm just going to drop the Telegram link to the free channel in the description of this video as well. All right, but basically, now let's give a rundown of this, right? And you can build strategies around this, okay? Let's say your 15 minutes time frame is bullish, right? And there are certain things that you obviously need to look out for, okay? To define your protected low or your protected high, and then to basically define your trading ranges, because you want to trade in between the trading ranges. I might probably drop a video explaining trading ranges much later, right? But these are things, or these are concepts that help you trade in line with the market. Okay, so like I said, let's assume your 15 minutes is currently bullish, right? You have a recent break of structure right here. And then you identify your point of interest. So your point of interest can be whatever you choose it to be. But let's say in this case, a low somewhere here in, obviously you know about discount and premium from the market structure video. All right, so what you want to see here is you have M15 is bullish right here. You want to wait for the lower time frame. In this case, 15 minutes. If you are trading off for 15 minutes, you want to go into the 1 minute time frame. All right. So you want your 1 minute time frame to come into a level of what? Discount. Okay. And basically it could tap into a POI. It can be anything, a breaker block, order block, fair value gap, whatever you want to talk to. And then you want to see the market now do what? Flip in the same direction as your main time frame. So scalpers could definitely use this, right? So if you're a scalper, this is a simple strategy you can use, right? After determining your range, okay? All right, so you want to see this happen. Now, at this point, what do you have here? You have a sweep here, and then you have a break of structure right here, okay? Now, this is now in line with what? M15 bullish, M1 bullish. So what are you waiting for? Once you see this, you are definitely now, the same thing you waited for here, or the same thing you found here in M15, you're going to find the same thing here on M1. Why? Because the market is fractal. All right, so the next thing you want to do is you want to wait for a pullback into this level and then price stops to do what? Its primary purpose is to take out this high right here. Okay, so at that point, you simply do what? You set your entry here, limit orders. I use only limit orders, right? And you simply cover this protected group on the M1 to take out where? This high, right? Because for the price is going to continue its bullish intent, this high here is going to be taken out. Okay, so this is basically it. All right, so this example I've given here is M15 and M1 time frame correlation example. Okay, and this happens every time, right? It happens a couple of times. Okay, all of this is pointing to what? Boils down to same thing, structure. Structure is king, irrespective of the strategy that you are trading. Wrap out your entry criteria around structure. Okay, using these time frames together, you can get very, very wonderful trades. All right. Okay, so now let me give you an example on H4 setup, H4 M15 setup. Let's see. Okay, this is BTC, right? So if I just going to follow structure right here, you have H4 break of structure here. You have H4 break of structure right here. So this is the break of structure. This is the break of structure, right? So in order for the market to flip bearish in this case. Now there are a lot of things I'm going to be leaving out, okay, because this is free content, so you can't blame me, right? But there is a lot that goes into this, right? The low that you need taken out is this low right here. Now, once this low gets taken out, you're now going to do what? This high technically becomes protected. There are reasons behind all of those things, okay? This high becomes protected, and then this low becomes your target. So now this is the 4-hour time frame, right? Of which, if you look at the daily time frame, you will certainly see this a lot clearer. Okay. So now the daily is what? A sweep and a break of structure right here. So the daily is what? Bearish. Okay. Even though looking at this, there's actually a trade inside of here. Now I know that even without checking it. I know that there's a trade inside here, right? Because this is something I see happen. This is something I've always traded and all of that. So this is the change of character. So if we are coming off of the daily time frame, all right, and we are saying that, okay, this is, okay, so in this case, I'll probably take this level right here. Yeah, so I'll take this level. So let's use it. Let's use the daily time frame, okay? So let's use daily and for an H4 structure. Okay, so from this level, this is the recent break upside here, and this is the change of character. So what do I want to say? I want to see H4 here become what? Bearish. So let's go back to the H4 time frame. So inside here, you can see clearly what happened. All right, this is a recent break on H4, right? And this is a change of character on H4. So right now, H4 is now bearish, like the daily time frame. It's now bearish. So this here might possibly be a zone that you want to look out for possible sells to happen inside here. All right. Well, okay. So now let's do something. This is the H4 time frame right here. Okay. So if you look at this, before this market structure shift, we had a recent break of structure to the upside, right? So looking at this closely, look at this closely. This here is your H4 high, right? This here is your H4 low. Okay, so let me do this. Let me call price back a little bit, maybe somewhere. Okay, so this is your H4 low right here. I'm giving a lot out, right? But yeah, let's just do it. And this is your H4 high. This is something that I didn't think I was going to share publicly in any before. It's all good. All right, so this is your H4 low here. This is your H4 high. This is your trading rate from this point to this point. Okay, you can as well mark out your premium and discount levels. Okay, so typically what do you want to do in premium? In premium, you want to sell. In discount, you want to buy. Okay, so right now, price is what? Bullish, current structure, right? Looking at the H4. So within this level here, what do you want to do? You want to look for sells. Okay, so let's just cut price a little bit. And you're on H4 time frame, you want to drop down to which time frame? From H4, you want to drop down to 15 minutes or 30 minutes. I typically prefer using 15 minutes time frame. So you drop down to the 15 minutes time frame. Within the 15 minutes time frame, what do I want to see? Well, let's quickly go back to the H4 and then mark out this recent supply. Okay, that is the recent supply in that zone. Okay, now drop down to the 15 minutes time frame. On the 15 minutes time frame, what do I want to see? I want to see the market give me something like this. I want to see M15 go bearish in this premium zone because I want to sell. Okay, so this is typically what I want to see. So you simply wait for the market. Patience is everything, right? There is a way to take aggressive entry. And the same thing you're doing here, you want to do it on M15. Okay, so the market is already in the supply zone. And what can you see here? This is we are waiting, break of structure in quotes. We are waiting, but a break of structure isn't a break of structure except it closes the body close. Okay, now this is the M15 low, right? So this is the low that if it gets taken out, then I'm going to be looking for sell if it gets taken out, okay, inside here. All right, so let's keep watching. We want to see body close, not a week. We want to see body close. Now, this is another break of structure, right? So, okay, on M15. Now, this wasn't a valid change of character, so obviously we simply knock it out. Okay, so now which low do you want to see taken? You want to see this low right here taken, right? Body close as well, body close. Now we have the body close here. So this becomes a what? This becomes a sweep, and this becomes a what? Change of character right there. Okay, so now what do you want to see? You want to see price within this range. You want to see price come back up here and then take a sell, right? That's what you want to see. So whatever you want to do, or whatever strategy you have around this, you can employ it, right? For let's say you pick this range or this entire range like this, right? But there's a way to it, right? I'm trying not to. It's free content, okay? So you could take this entire range as your entry, and then your entry will be here. Your SL will be this high, right? There are ways to refine this anyway. And then your TP1 could be this 50% mark, right? Because the market could very well reverse from here and continue buying. Remember, H4 is bullish, right? But if you want to, if you're an aggressive person, right? You want to probably take this low right here, okay? Right? Because M15 is bearish, but you know that H4 is bullish. So preferably this 50% mark of the H4 range is where you take your entry, is where you take your TP out. Okay, because from this point you could have buyers coming again, right? Remember, trading is a game of probabilities, okay? I'm trying not to make this video long as well, so. Yeah, so this is your entry, right? But of course, there are other things you could look out for to mark this to improve your RR, okay? Right? You could have a whole lot tighter SL, right? And then a bigger TP, and then basically your risk reward is more at that point. So now let's just play price and see what happens. So you get tagged in right here. Okay, so in this case now we're using H4 and M15, even though I saw a daily formation there, right? For a trade that could possibly happen. Okay, and so let's keep playing price. Okay. All right, so here, if you notice, if you were taking your full TP at this 50% mark, obviously you would have been out of this trade. And we got a retracement here. Buyers came in, right? And then sellers took over again, okay? So this is why I said at the midpoint, which is discount level, 50% level, you can see buyers coming and you can see exactly what happened here, all right? So you'd have taken your partials here and then maybe set the trade to break even. Or you could have taken your partials here, left the trade to keep running at the normal SL targeting this low right here. So let's see what happens. Obviously, we've seen what happened, right? Obviously, just by looking at the chart, this low definitely got taken, and that was where the H4 market structure shift happened. Okay, and yeah, there was another trade set up in there. But again, I'm trying not to make this trade long, but basically, this is it. At the end of the day, you just need your time frames to correlate. And if you're in the main channel, like I said, I'll share the link below the description of this video. You'd have seen a silver trade I shared on 30th of December, 2024, and you obviously can see what happened with the trade. All right, so this is basically it. You see at the end of the day, trading of all H4 and 15 minutes structure here that gave us a valid sell, the valid sell structure right here, right? Taking it off, you can see that you would have made good RR here, right? At least even up to the 50% mark, okay? You would have been good all the same. All right, so I'm going to stop this video here, right? I'm not going to edit it, right? I'm recording directly and I'm just going to share like this, okay? So this is basically the takeaway for this video. This video is majorly about time frames correlating. Again, the more time frames you have correlating, the higher the probability of that trade going in your favor, right? So basically, you want to have more time frames saying something. So let's say you're a swing trader, you want to have the monthly being bullish, you want to have weekly bullish, you want to have daily bullish, and then you take your entry off of H4. Definitely, what's going to happen? That trade has a high probability of going in your favor. The more time frames you have in the direction that the market is trending, the higher the probability of that trade going in your favor. So I hope this helps you guys a lot, right? Time frame correlation is something you definitely want to implement in your trading system. Okay. All right, take care, and remember, click the link below to join the free channel. Stay safe.